Dear friends, good morning. Here we are with the usual meeting about foreign exchange market regarding the analysis starting from next week, March 29, since next Friday. It will be an interesting week, the next one, because we will have payrolls data from US. But let's talk about last week a little bit, because we have to understand what happened to try to figure out what will be the next one. Last week it would be a choppy trading week, especially in the currencies versus the dollar. Since 3 weeks, and we are keep going with the same mantra. We are saying that there are two opposing forces in the market that are balancing and they are, the QE on one side versus the tapering on the other side. So we have, these two opposing forces that stop a little bit the dollar move versus the major currencies, while the crosses are moving so much and much more. And the reason is linked to the fact that there are some pairs like yen and Swiss francs that are the safe haven currencies, and they are sold, massively sold after Jerome Powell said that liquidity will be guaranteed in the market for at least 1 year, 1 year and a half. So in the short term, the risk on and the liquidity that flooded the market, equity market, helped the yen and Swiss francs to move down. And dollar yen and dollar Swiss moved higher, while euro dollar slide a little bit lower. And on the other side, Aussie, Kiwi, CAD and Sterling maintain a stronger tone versus the greenback. So there is a different situation according to what happened in the different pairs versus dollar, in different currency versus dollar, while the crosses are moving so much. Like for instance, CAD yen. Dollar yen is moving much higher and dollar CAD is staying stable on the lows. On the other side, we are seeing Euro Aussie, Euro CAD, Euro New Zealand moving and sliding lower due to the fact that European Central Bank is trying to push it a little bit lower, the euro on with verbal intervention, while on the other side, Aussie, Kiwi and CAD are still really strong versus the greenback. But let's talk about next week then. We will see next Tuesday, guys, data from Japan, like employment and retail sales, that could affect a little bit the yen even more, while next Tuesday inflation in Germany will be the focus and the topics. Be careful, because that could move euro, and if the consensus will be respected at 1.7, 1.8% on a yearly basis, inflation could affect a little bit euro move, with euro that could rebound a little bit versus all pairs. But still next Wednesday there will be data from Australia, balance of trade, that could be roughly around 10 billion in the month on month. But still Wednesday, don't forget the ADP, which would be the anticipator of the payrolls that will be released next Friday. And that could be the topics of the next week. And the dollar could be affected in one way or the other. We have to see that if according to what will get out from the data. Consensus is very strong, both for ADP and the payrolls, and we will see together. So let's stay together, guys. Let's stay in touch. Let's keep in touch, because next week will be really intriguing. Have a nice trading week. See you next time. Bye-bye.